Coming up on Market to Market, Perdue and Pruitt give their take on key questions for rural America. NAFTA negotiators work against a political deadline. Sunshine State producers reclaim lost ground after Hurricane Irma. And market analysis with Mark Gold next.
Market reacted very strong.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, since 2001, offering fabric-covered buildings designed specifically for the cattle feed industry. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, April 27 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Weather across the country has become more spring-like, helping push away the winter blues. The Conference Board says consumer confidence rose last month as jobs were more secure and for some concern over a trade war diminished. The confidence spurred a few more people to purchase a new place to live as sales of existing homes moved 1.1% higher in March. And while orders for durable goods shot up 2.6%, it was aircraft sales that skewed the numbers. When transportation is removed from the equation, orders were flat. This week, the National Association of Farm Broadcasters held their annual Washington Watch. Attendees included House Agriculture Chair Mike Conaway, who said he will pass the 2018 Farm Bill out of the House as early as the week of May 14th. I was at this year's no-holds-barred press gaggle where high-ranking members of the Trump administration were invited. First up was EPA Administrator Scott Pruitt, who was drilled by reporters about the hardship waivers being doled out by the agency.
And what's happened historically that has not worked well is that DOE and the EPA have not been working together and collaboratively. We have, and that's we use their data, and we make informed decisions based upon their data, and it's objectively and statutorily driven.
However, Pruitt offered few specifics.
I can't emphasize enough that the granting of the small refinery exemptions is objectively determined. It's not policy, it's not subjective.
The administrator additionally addressed the controversy surrounding the approval of E15.
I think it's a debatable question on whether it's Congress or a regulatory response. That's why it's taken us time to address that. We want to make sure we get our ducks in a row if we take that step from a regulatory perspective.
Secretary Perdue also stopped by for a few questions from reporters. The secretary has spent most of his first year in office walking the fine line between catering to his rural constituents and supporting President Trump's policies, most notably on trade.
The goal of the president is not to require agricultural producers in this country to be the only soldiers in the battle. We know that there will be some temporary trade disruptions, and I do believe that most farmers, most ranchers, most ag people are patriots. I think they're Americans first, and they understand when China's cheating, somebody needs to call their hand on it.
Perdue went on to discuss what remedies rural America might have if a trade war breaks out with China.
We're looking very closely to see, meeting with the sorghum producers specifically right now, watching pork very carefully in that, but we don't want to move too quickly. We don't want to move in a way that would set a precedent of expectation from all producers. Any farmer knows there's market risk. There's enough market risk out there with weather and just general trade markets and different things like that. We don't want them to be the victims of trade dispute market disruption.
And on the issue of E15, the secretary offered his thoughts on the stalemate between ethanol producers and oil companies.
We think if we expand the E15 waiver, that will put enough RINs in the market to make sure that RIN prices are fairly traded.
Perdue says another meeting on the approval of E15 will happen in the coming days, but gave no specific date. Late this week, a North Carolina judge awarded neighbors of a hog farm more than $50 million in damages over odor complaints. The outcome of the lawsuit will be appealed by plaintiff Smithfield Foods. A recently minted state law blocks new lawsuits of this type. Before the story broke, rural America shifted its attention from a trade war with China to its number 2 and number 3 trading partners. John Torpy has more.
This week, the southern and northern neighbors of the United States each shared optimistic views of the renegotiations of NAFTA, as trade talks continue ahead of upcoming tariff talks. Mexican President Peña Nieto, while on a trade trip to Germany, expressed confidence in reaching a deal that benefits all partners in the North American Free Trade Agreement. However, one obstacle for Mexico is the possibility of a sunset clause that allows any partner country to opt out of the new trade agreement after 5 years. According to Reuters, Canadian Foreign Minister Chrystia Freeland touted good progress with negotiations surrounding automotive sales, but remained opposed to the possible U.S. steel and aluminum tariffs. All the players face political battles in the months ahead, including elections in Canada and Mexico, as well as discussions on tariffs proposed by President Trump. For Market to Market, I'm John Torpy.
At the end of August last year, Hurricane Irma struck Florida. It swept away lives and businesses, leaving $64 billion worth of damage in its wake. From agriculture to tourism, no industry was left untouched. Josh Bittner has more in our cover story.
As the Sunshine State limps toward the one-year anniversary of Hurricane Irma, fishery owner Tom Hill is signaling a green light to vacationers.
Tourism is a big part of what the Florida Keys is about. Irma smacked us around pretty good, and we're surviving from it. Key Largo is fortunate that we're up and running again.
Breaking records in the open ocean in September 2017, Irma weakened to a Category 4 as it pummeled the domestic island chain with 140-mile-per-hour winds 80 miles southwest of Key Largo. Impacts were felt within a 400-mile radius as the tempest charged up the Gulf Coast.
We had in our facility some flood damage. We had a foot of water above. In fact, where we're standing right now was this deep in water.
While 84 casualties were reported in Florida, Hill commends local and national authorities for their swift response. And as he works with private insurers to recoup his losses, Tommy Vick, a produce grower on the mainland and nearby Homestead, says government assistance can take a while longer.
So every flower was going to be a tomato. Irma had a significant effect. When it hit us, it was between a Category 2 and a Category 3. Now, that also did damage on our avocado fields. We lost, I would say, 75% of our crop that we had remaining. We had about 60% of the field knocked over. So we had to go in there and stand the trees up. Now, they want to inspect it, which is fine, but when they get to it, which is a month or 2 months later, I got to get those trees up now.
Storm debris also kept local wildlife purveyor Luke Kuhn from returning to work in a timely manner.
These alligators are capable of jumping. I'll tell you what, after the storm, when all the trees are down, it doesn't look like the same place. It's pretty unrecognizable. We're the last thing on this road, or we're the farthest point, so the trees that were on the road, no one had cleared by the time we got here a few days later. So it took us walking to work for the first few days, maybe about half a mile, through different trees, down power lines, until we were able to cut enough to where we could drive a truck or a car through.
Boasting over 2,000 gators and other exotic animals, Everglades Alligator Farm's tourist operations were shut down for 2 weeks in Irma's wake.
Bye-bye. It's definitely a chunk of revenue.
Though cleanup and renovation moved right along, portions of the farm were forced to remain closed longer for safety reasons.
We've built our enclosures with telephone poles, so they're very sturdy, but we did have a fence or two that went down, and we don't want the wild alligators climbing onto the pathways to where they can interact with people.
It'll be about a year before we're back
in 100% back where we were.
Near Miami, Josh Smith manages a 20-acre greenhouse and shade farm operation that weathered the storm.
We grow interior scape plants, spring plants, stuff that you would see in malls or office buildings and stuff like that.
USDA's 2012 Census of Agriculture reveals Florida as the nation's top dog in indoor foliage production. According to the 5-year farming survey, over 94 million square feet were under glass or other protection in the state, with 671 farms contributing nearly 70% to the nation's $563 million inventory annually.
What happened with a lot of the pieces of shade is it split down that seam, and then it blows apart. That comes apart, breaks the poles.
While Smith scrambles to acquire replacement materials when competitors have similar demand for inputs, some of his greenhouse infrastructure is designed to ride out the worst Mother Nature has to offer.
This is called a Cravo house. So I can open the roof and lift up the sides, and basically the wind just blew through here. Got a little bit of damage, but not much. The plants got knocked over, but I was able to come back in, stand the plants back up, and close the roof and just keep growing.
Though structures like these have helped growers hold on through numerous hurricanes, some measure rebounds against a decades-old benchmark. Hurricane Andrew left over $27 billion worth of damage after it slammed into Florida in 1992, leading to an overhaul in building codes, insurance practices, and the role of federal government.
I've been fortunate enough to experience both, and life before Andrew was different than life after Andrew, and life after Irma will definitely be different as well.
Branching out into additional domestic and international markets has helped Key Largo fisheries avoid disruption as regular customers, hotels and restaurants, reopen ahead of the summer vacation boom. But Hill has no doubt the draw of paradise will help the local economy find its sea legs post-Irma, just as in the past.
In the Florida Keys, there are no down days, It's all good times, so no matter when you come, it's just different angles of the sun, that's all.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Spring planting is in full swing. However, Mother Nature continues to throw a wet blanket on the annual rite despite the prospect of a large harvest. For the week, July wheat soared 21 cents while the nearby corn contract rose 13 cents. Poor growing conditions in Brazil displaced worries about a fall-off in Chinese demand as the July soybean contract bumped up 16 cents. July meal grew $16.70 per ton. In the softs, nearby cotton lost 22 cents per hundredweight. Over in the dairy parlor, May Class 3 milk futures were 17 cents higher. The livestock sector had another volatile week as the June cattle contract gained $3.27. August feeders added $3.75, and the June lean hog contract plummeted 6.3%, losing $4.92. In the currency markets, the U.S. dollar index skyrocketed 128 ticks. Crude oil fell back 30 cents per barrel. COMEX gold dropped $14.90 per ounce, and the Goldman Sachs Commodity Index was relatively flat at 473.05. Joining us now to offer insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Thanks. Nice to be here, Delaney.
Mark, we're going to switch it up a little bit today and take a social media question right off the bat here. All right, well, to start here, we have Joseph in Wisconsin, and his question is, with the rising price of oil, what effect will it have on the grain markets, both in the short and long term?
Well, in the short run, we've had a tendency for soybean oil to follow crude oil, even though there's no real connection there. And we've seen the displacement over the last several months with crude making new highs and soybean oil making new lows. So in the short run, it can have an effect, but in the long run, it's an indication of inflation. And if we're going to see inflation coming back into these markets, higher interest rates go along with that, crude oil prices, then people get a little bit more excited about buying commodities if there is a strength in the crude oil market because of the inflation. So I think it makes some sense that We've had a nice run on the crude oil, and that I think is spilling over into the grains a little bit as well.
It is, and we certainly saw some strength in the grains this week. When we look at the wheat market, especially the soft red winter wheat had some strength here at the end of the week. Are we finally seeing weather take some hit here and add some premium into the market?
Well, frankly, when we had this break in this wheat market over the last week or so, I kept saying I don't want to sell it down here because I believe that the wheat tour next week in Kansas is going to find some real problems out there. I just don't believe you can have a freeze, a thaw, a freeze, and a thaw on the same crop and drought and expect to have anywhere near decent yields out here. And in fact, I think we're going to see abandoned acres. I think we're going to see a lot of production issues along with that. And I believe the wheat market's got some legs here. Now, if somebody would have said the dollar was going to be making strong moves here to 92 cents and the wheat was going to rally with it, you'd be surprised. But they're looking at some weather in Russia being a little drier than they'd like to see this time of year and cold. Certainly, we've got a mess up in the northern plains trying to get a spring crop into the ground there. I don't think I've ever seen the ratings this far behind. So I think the wheat market still has some legs to it.
All right. And as you talked about there just briefly a minute ago, you're expecting maybe to see some acres switch out of those wheat acres, those spring acres that the USDA projected. Do you see those switching then to corn or soybeans?
Well, I think up in the Dakotas, they'd probably go into soybeans if they can. The price ratio still favors soybeans up there. I think some will go into corn. In the South, I think if they can't get acres planted in the South, those are going to go into cotton. Cotton's had a nice run here. So I think we could see some of that shift out. But, 2 weeks ago, everybody's talking about the planting delays, and we're here. And even last week's planting numbers showed the big delays out there. But give the American farmer a little bit of a chance, and we've got that chance over the next 10 days. I think we're going to see these numbers rebound very quickly. The American farmer can get the crops in the ground. Just give them a window of opportunity.
Absolutely. That's the window that they're looking for. And speaking of corn, let's move on to corn. With the expectations that the trade is expecting with lower ending stocks for next year's marketing year, plus the smaller perceived planted acreage that we're going to see this year with 88 million acres, if that holds true, will that signal some long-term strength for the corn market?
Well, I think we've got to see demand pick up a little bit here.
Okay.
It's been good. We've seen some good export numbers. Brazil's losing some of their crop, it looks like on the second crop there. So we've got a little bit of a story in corn. Again, we've got to close the December contract over that double top at 416. We got close today. We got to 414 and a quarter. I think it was the settlement. That's just a quarter or half a cent away from the highest settlement we've seen on December corn. And we've got the double top at 416, just a couple of cents over.
And 416 is really what you're looking for, that resistance level?
Yeah, I want to see us close over 1417 to really think that we can see another push higher in this market. But I think looking what the corn did this week, it ignored the dollar, it ignored the better weather for planting, and it still moved higher. So that's telling you that a market's got a little bit of strength there. But it's the end of the month. It's the last Friday of the month. We saw contract high closes in the meal. On Monday, we're probably going to see contract lows in the oil. And those are I want to be selling those highs and buying those lows. But I think these markets have got a chance here. It's the right time of year to rally if we're going to rally. Somebody came out with a long-term forecast saying June was going to be hot and dry. I didn't see who that was, and I'd be very skeptical about talking about that until I know who it was. But the fact of the matter is there may be some weather scares here that can push this market higher.
And when you look at the grain complex as a whole, do you expect to see some strength in the soybean markets long-term as well? We did see some strength here towards the end of the week.
Well, the meal market, something got into the meal market on Friday, which pushed the beans. Meal was up $14, $15 a ton, I think. That's a significant move. Was that Chinese buying? Was it Argentinian buying? We don't know. But something got into that meal more than just the funds, in my opinion.
And do you think it could be potentially, with the strong meal demand we had here at the end of the week, anything to do with the cargo vessel wreck in the Rosario Grain Exchange?
Well, we knew about that on Thursday morning. The beans opened higher. They were higher that night and then opened higher, but then faded during the day. So we knew about this yesterday, and it had virtually no impact on the market. Some are saying it could take 4 to 6 months to clean up the mess down there. Generally, when we hear these kind of things, it's usually not as bad as people would say, and they get things fixed quicker than normal. So I don't really think today's meal was about that. I think it was about somebody coming in, caught short in the meal market and wanted to get in before the end of the month.
Okay. With the Rosario wreck that happened, will that give us the potential to get rid of some of this excess meal that we've been using here or producing here in the U.S.?
Well, the meal market up until the last week had actually been pretty soft. And then we saw this rally mainly on Friday. Is that a primary shift in the market? It's an outside up day on the charts. It looks strong. But again, we made a contract high close the last Friday of the month, so I'm a little bit skeptical. If we could close higher on Monday, then I think we've got something going here in this meal market that the market hasn't accounted for. Could it be South Korea and North Korea shaking hands and maybe some deal being made there? Could it be Mnuchin and China making deals there? We don't know, but something got into this market that was friendly, and that's good news for the American farmer.
It really is. Really quick, I want to squeeze in cotton since we don't get to that usually in the main portion of the program. What do you anticipate to see with cotton's ending stocks ahead of the next supply and demand report coming up here in May?
Well, we've seen a nice run up in this cotton. I would imagine that stocks are going to be tight as a reflection of the price where we're at. But I think over time, farmers are going to respond. We're going to see more cotton acres planted, I think, than most people would think. And high prices will generally attract that. And longer term, I'm a little bit more bearish on the cotton.
Okay. Let's transition here into livestock. I feel like this gets talked about a lot, or has been talked about a lot over the last couple of weeks, but we have this huge spread between the May, August, and the feeders. What's that saying to the industry?
Well, it's telling us that we have good near-term demand. We traded 124 on the cash this week, which is an incredibly strong price. At one point this morning on Friday, we had almost a $20 spread between the April, which go off on Monday, and the June contract. It's not unprecedented, but it's an awful big spread. Farmers want to know, is the June going to, once we get the Aprils off the board, is the June going to move up, or are we going to see cash prices move lower? I think it's going to be more the cash moving lower. We've got about 800,000 head of cattle coming into the market.
I know, the wall of flesh that we keep hearing about.
Now, the demand's been great. Are we going to be able to see in the grilling season, and these are our big months, May and June, are we going to see the demand suck up all that extra beef? That remains to be seen. The market is telling us no, and that the cash prices will come down. But my guess is we're going to creep the cattle market a little higher. You have to watch the June contract. If we close it under $100, that's a signal that there's a lot of beef coming and there's lower prices ahead.
But slaughter has been relatively strong. So with live cattle, are you nervous that we're going to hit a glitch here in prices and see some downside potential?
Well, I worry about that, but I think what farmers look at is they look at with the price that's going off the board. It's like an old crop, new crop grain spread. Well, the old crop's at $8 corn, new crop should go up there. Well, not necessarily. We find that the old crop will generally lift in the new crop, and that's a good selling opportunity. So even though we're $17 behind in the next month, doesn't mean that you shouldn't be protecting it out here. Okay,
really quick, I want to squeeze in hogs. We've seen unusually cold weather that's been affecting the grain markets. Is that cold weather affecting the hog markets as well, and are we going to get a spring or summer rally?
Well, we've had these summer months up around the $80 and $81 mark, and I've been saying anytime we get into the low 80s, it's a good hedging opportunity, long run. We've seen the bigger numbers and the lower prices in the spring, and I'm not sure that we can't see some lower prices yet in these hogs. I would certainly be protecting them on any rally out here. There's something fundamentally weak in this hog market that I think we have to be aware of.
So with that being said, are you seeing indicators of a short-term trend or a long-term downside trend?
I would be more bearish to hogs than anything else at this time. I think they've got some risk out here, and guys need to be buying some $75 puts for the summer to protect the downside.
Any numbers that you're looking at specifically for a downside target?
Well, now that we've closed under 80 again, it opens up the door maybe into the mid-60s. So I think that's significant risk well worth protecting out here.
All right. And I just want to finish up here talking on weekly export sales. We saw relatively strong export sales in the hog markets this week. Really quick, where do you see those headed in the future?
We've had some good demand over, through the hog markets. Is that going to continue? I have my doubts. I think the market is trying to tell us again that there's something fundamentally weak in this hog market that may be a problem longer term. So I just can't get too bold up on the hogs at these prices.
All right. Well, Mark Gold, thank you so much for being here with me today.
Thanks for having me.
That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. If you need a break from planting, then check out our Facebook page. You'll find pictures, polls, and you can leave our analysts a question. Give us a like. Join us again next week when we explore how the pecan industry is working to preserve market share in a shadow of trade tariffs. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, since 2001, offering fabric-covered buildings designed specifically for the cattle feed industry. The next generation of cattle buildings. Information at accusteel.com.